welcome back to my new show, Michael Brue, Real Estate Unlocked. Kind of super excited about today. Now, for those of you that know, I've known Mike for a long, long time. We go super far back, and this is super exciting for me to just have him here on our show. So let me introduce you to today's expert, absolute expert in mortgages, is Michael Rivieccio with Group 1 Mortgage. Mike, thanks for coming on the show.
I love it. Thank you.
So super excited to have Mike here. Mike has been doing our family mortgages for about the past, I would say 15 years or so. He takes care of all of our personal clients. And if you have not had the opportunity to use him yet, you're going to find out today why most of us have already dialed it in and figured out what Mike has figured out to make us look good when we're dealing with our clients. So, Mike, I know I've known you forever. I'm super excited about this. But how long have you been in the mortgage side of the business?
Well, since 2005, generally, I was originally with a bank, and I felt that it was really institutionalized, and not really catering to the customer and the realtors in my market. So I went with Group 1, who's been around for 30 years, and it's a privately held company. We lend our own money. So it's kind of like a portfolio situation where it's all about the client and the consumer and the realtor. So I've been with them for 16 years now, and it's just amazing to see a small mom and pop company grow to 250 loans a month that we do now in the local market. So it's a pretty cool situation.
It is, but there's a reason for that, Mike. So you have seen it all. You've seen like the market evolve and change. What are some of the changes that you see from like how we used to do real estate, mortgage related, and how we're doing it now?
The biggest changes I feel are back in the day before they would give, a police officer and a school teacher, for example, they didn't really look at debt ratios or anything. Everyone was a real estate investor in 2006, 7, and 8. Fannie Mae and Freddie Mac would allow us to go up to 10 homes without checking income, and nothing was documented, and it just had the writing on the wall for failure, and we all have seen what happened. So the good news for the good brokers is when the Dodd-Frank Act was passed, it basically just said, hey, everyone needs to qualify for a loan, be knowledgeable about their rate, their APR, what they're paying for the money, and there was no more games. And what it really did is it whittled the bad people in a great industry out. Like it just whittled everyone out that had to play shortcut mortgage, we called it. They just took the easiest low-hanging fruit. It didn't matter if the consumer was at risk of losing their house at someday. It was just get that deal done, collect your commission, and move on. So those of us that are still in the industry today, very super successful, and we made it through the tough times, and it really just took out the garbage, to be honest with you.
Nice. I like it. I think you're absolutely right. So it kind of cleaned up the industry, so to speak, and now you actually have to qualify for the mortgage.
Yeah, so when everyone says, like Stacy alluded to, that the market has multiple offers and there's no inventory and this and that's two-part, because most of the builders and the banks that got frozen or taken over back in the crash, builders stopped building because there was no money to build. Banks didn't want to back spec homes. So we had a 3-year shutoff of inventory. Well, now when the world turned around the last 4 years, we're seeing this ample inventory or lack of inventory because the supply and demand just didn't weigh out. There was nothing built quick enough, and they can't build quick enough to catch up. So, and this go around, everybody had 2 years of returns, pay stubs, and they could actually afford the property they're buying. Even in a down market, they could still make that payment because everyone was like overqualified the last 6 years since the Dodd-Frank Act. So we'll see a normal foreclosure turn soon in the next 18 months, but it's just going to be because of businesses, slowdowns, divorces, death. Like the normal reason 15 years ago why people got foreclosed on was life-changing events, right? So it wasn't because they didn't qualify for the house this time. So instead of 5 houses on a block going under foreclosure at the same time, like 2008, 9, 10, you'll have your one divorce situation where that one will go, but the other four will be fine because they are qualified to buy the house.
Well, so that brings us to a great point, and you're right. I remember we were all wannabe investors, right? 6, 7, and 8. Everybody got in the game because it was the best game in town. I mean, I remember like anybody could qualify and anybody could buy a house. So it's kind of neat that we went through this 6-year tighten up, and I remember feeling it. I remember hearing about appraisals not coming in at value, and it really did change the dynamic of our industry some. So thank you so much for being a part of it and being one of the good guys who made it through and always shining. But I think what makes you brilliant, Mike, is the fact that you are so in tune with the different programs and what it takes to qualify for those programs. So and I know you don't have time to tell us all the ins and outs and the intricacies, but what would you share with us about some of the programs being offered today that might make sense for the climate and the market that we're in of the now?
Well, my biggest recommendation to all home buyers is to get ready. You don't just go buy a car now. You actually research the gas mileage. You check 3 dealerships for the same car. You pick out, you want a Tahoe, you want an Expedition. Like, you know what you're getting into. So most of the people now are prepared to walk in my office saying, I want a 30-year fixed. I want my payment to be $2,500 with taxes, insurance, and everything. And they give me, an arsenal for my gun to say, perfect, you qualify with your pay stubs at XYZ amount. So my biggest advice to compete with multiple offers and all the stuff going on with the market the way it is just be prepared first, so that when you do go with Michael or Stacy or any of our awesome Compass principals or agents, you have the opportunity to go to that house, see it on a Saturday, and pull the trigger because you were ready 2 weeks before, as opposed to loving the place, and then you end up being able to afford it, but you weren't ready, and 5 other offers got put in front of you because you weren't ready. So that's the biggest change I found with the situation we're in due to multiple offers and lack of inventory and cash buyers, like Stacy said. I've had clients beat out cash offers a ton of times because we were super over prepared. Like when they went to see the house, they would call me at 11:15. They saw the house at 11. I'm very proactive, so I would call whatever agent had the open house. I would call them directly and say, this is Mike from Group 1. I've been around for 17 years. I'm sure you know of my reputation. We're a small town. Mr. and Mrs. Smith submitted all of their credit application. I have all their tax returns documents. The pre-approval is an approval. I already have an approval for their loan. It just has to appraise and the title has to be clean. So it's like a cash deal. Please give us the opportunity to get this house for this family. So being prepared, I would say, is the number one thing to offset the situation that we're in with multiple offers and stuff like that.
So I like it, Mike. That's great advice. So if you know you're shopping for a home, you know that this market's going to be super competitive. One of the best things you can do is contact you, get prepared ahead of time, not only make application, but also work through the stipulations and the requirements of any documentation required, so that you, if I'm hearing you correctly, you actually go above and beyond. You reach out to make sure that you're connecting with the agent on the other side, reaffirming the buyer in the deal and the buyer's, how solid they are to actually make this approval happen. That is fantastic. It's actually something I have not heard from anybody in the industry so far. Now, you've probably seen, as I have, a lot of changes in the real estate market leading up to the market of the now. Now, what do you think some of the biggest changes that we're seeing from years ago, to today?
The biggest thing that we've seen, honestly, is the government interaction, which I don't like. So Fannie Mae and Freddie Mac are the two biggest entities that were taken over by the government in the crash, which backs the banks on 30-year fixed paper, which means the banks feel comfortable writing 30-year fixed mortgages because they're backed by Fannie Mae or Freddie Mac to a certain percentage. If they go bad, the bank's made whole by this insurance or by the backing from Fannie Mae, Freddie Mac. What I've found the biggest change is my bank, we do portfolio lending, which means we hold the paper. We don't care if Fannie Mae or Freddie Mac backs us on some of our loans. It's just an outlet for that one buyer that, let's say, has a ton of assets, but they just retired and they didn't want to take their retirement yet. We have asset distribution loans where I can just pretend like they're taking a monthly payment from their $2 million IRA or whatever. And so I have different products to where I don't have to follow the 9 checklist rule that the government put out for us. I can just do a make sense loan portfolio that says John Smith really could buy this house cash. So we don't need to worry about all these side rules. We can just underwrite it as an asset depletion loan. And there's all kinds of other stuff I won't get into. But the biggest change is the smaller banks like me pivoting from just selling to Fannie Mae and Freddie Mac and following that rabbit hole, and either you fit in the box or you didn't, to me and my company now finding not loopholes, but ways to get a deal done that don't follow the Cracker Jack box, has to be this way, or you don't get the prize. So that's the biggest change, is that we've evolved with good credit, good assets, and an opportunity to get people into homes that 6 years ago you either fit in that little hole or you were a round peg and that was it for you. So that's the biggest change I've seen.
Well, thank you for that, Mike. That was excellent. I'm looking at some of these new strategies that certain agents and their mortgage broker partners are doing in a combination with each other to win and be strategic in the multiple offers. Because we're hearing time and time again that most properties right now, if it's priced well, looks great, and it's got the curb appeal that's necessary, it's probably going to go first. And by first, it means there's usually 7 to 10 people who are shopping in that price range, kind of hunting, if you will, to see something like that come on the market. What are some things that you could maybe give us, or what you're willing to share with us at this point, to kind of help secure those multiple offer bids?
Like I said, I'm going to retract back to being prepared. I have a ton of agents that work with me. They know, like, and trust me. And I tell them, hey, don't show them anything until they're like approved. I have the four pieces of information. I have their credit, I have their income, I have their debt ratio in line, and I have their, willing and ableness to pull the trigger right away. Because for the next 12 to 18 months, with this supply being so short, we're going to be in an opportunity where they're going to get disgruntled and disappointed, because if you're not prepared, you're going to miss out on every single property that you love.
So, Michael, I want to say thank you so much for coming on the show today. I kind of feel like I did something good, because I'm unleashing my secret weapon, or one of my secret weapons, which is you. And I know you've always get it done for us, and we want to say thank you so much for that. Thank you for coming here. You're a mountain of knowledge. You know the programs in and out. If people were to get a hold of you, Mike, what would be the best way to contact you?
The best way is my direct line. I have a lot of staff, and everyone monitors that phone every hour. It's 561-262-6170. Or you can find me on the web at group1mortgage.us. It's spelled out GROUPONE mortgage.us. So call me with questions. Not if you have a deal right now, great. But my biggest helps me sleep at night is to have someone that's like borderline can buy a house, but then I coach you for a month or two with paying your credit card down to a certain limit so your score jumps 20 points, so you get a better rate, how to save a little bit. I have customers now that I've worked with for 4 or 5 months. Their credit's fixed. They've saved 15, 20 grand, and they're in the market back with the realtor where they couldn't buy 6 months ago. Now they're going to be under contract this weekend, a couple of them, on properties. So I'm in it for the long haul for you, to get you to know, like, and trust me. And at the end of the day, If you buy something now or a year from now, I did my job.
Awesome, Mike. Thank you so much for coming on, man. I really appreciate it.
Mike.
All right. Well, hey, guys, this is another wrap of Michael Brue, Real Estate Unlocked. Stay tuned to what we're bringing next. Some of the stuff that we're going to be bringing to you is going to shock you.
And welcome to WRP Studios. And this is not my backdrop. I kind of hijacked Michael Brue, Real Estate Unlocked, even though he's sitting next to me. What's up?
What's happening, Wayne?
Okay, a lot going on. A lot going on in real estate.
Yeah.
A lot going on with your show.
Yeah.
But it's interesting because booking guests always becomes an issue because it's a timing issue. And people are busy. And the real estate market is crazy.
It is nuts.
Tell me what's going on with this real estate market.
So I think the real estate market has kind of took a few different turns, if you will, Wayne. So we were in this incredibly hot boom where we were holding, I mean, you could basically hold a mini auction in front of a house and just watch the price go 10, 20, 30, some cases 40,000 over the asking price. And I think everybody was a little bit worried and concerned. So the market's still super hot and properties are still selling every single day. We did see that kind of drop off a little bit, I think, as the northern states reopened and some of the different climate things around the globe are going on. People, I think what happened was summer came and people got really interested in about taking the family out and going on vacation and just not paying attention to anything going on in the universe. So with that said, I think we had a nice cool off, if you will, in the middle of summer, which is a great time to cool off, right? Because it's so super hot anyway. But it didn't cool off completely or shut off. So it's really important to know that this wasn't about like, did the boom go away or is the boom shut off? No, the boom is still there. We're just seeing more reality and more realistic pricing with regards to buyers and sellers right now in today's market.
Is it, would you call it a level off?
Yeah, I think it would be a little bit of a level off for about the past month, maybe month and a half or so, with a small still climb. And it really depends on the price that you're going in. So if you're going for the 500,000 and under market, and that's just about all the different counties that we serve, Palm Beach, Martin, and St. Lucie, you're still going to see a great amount of activity. You're still going to see properties selling at list price, maybe a little bit above list price. But it has certainly calmed some so that, you know, buyers are going to be a little bit more apt to actually get a home that they're interested in right now.
Without having to fight 18 other people.
Well, they'll have to fight like 7.
So, you know, so this is coming about and this is happening.
Yeah.
Is it going to stay level? Is it going to, when I say level, we know real estate, very cyclical, and it's going to climb. It always usually does. Maybe not in leaps and bounds, sometimes in steps. Do you think it's in its step portion moving forward, or do you think we're going to see another leaps and bounds?
Well, I think that's the $26 million question. And once we figure that out and we can actually generate the algorithm on that, we could bottle it and then we could sell that to people all over the world. I think that I'm no Nostradamus, but I do follow the market. I kind of study the market like a nerd. And I'm seeing that we're going to probably see a strong market right through the end of this year. And then I think we can wake back up in probably December, January and assess that again. I think we'll see a very steady, much slower increase climb over the next 6 months or so.
Okay, so then I have to ask you this. There is a moratorium in foreclosures.
Yep.
Will the whole landscape change when that goes away?
No, but what that is going to, and it's a great question, Wayne. That's a great question because the way that has been, kind of painted to all of us and projected is that it's going to cause the next meltdown and we're going to have foreclosure city and we're going to be back to like 2008. But no, we're not, because there's a tremendous amount of equity that's still in the market and a tremendous amount of equity that was influxed in this market over the last decade or so, maybe even over the last almost 2 decades now. So What I think that it's going to do is it's going to create another inventory stream for us. So we're going to start to see a little bit more inventory where buyers are going to have that much more of a selection. So the ones that we're waiting are not necessarily going to get a better price. They're not going to get a lower price. I don't think things are going to roll backwards. We're not gearing up for the big rollback, right? But what I think we are going to see is that there's going to be more inventory, which is going to create more selection, and people are going to have more opportunity to gain something that they really like in this new market that we're about to head into.
So, right now, okay, we have two markets. We have the buyer's market and the seller's market.
Yeah.
Okay. So right now, the sellers are like kicking butt, can do what they want, basically. Okay. Price things where they think, because I don't care what market you're in, a seller prices things with their emotions and not with logic. Okay. Oh, my kids grew up in this home. It's a very, very tough scenario.
Yeah, there is some of that.
Okay. So, this, and correct me if I'm wrong, but a base standard is 1.5 million homes on the market. Okay?
Yeah.
Is that going to double when foreclosures come into play?
No, I don't think so. But instead of doubling, I think it will go up by a small percent. And again, that percent isn't going to necessarily drop pricing. That percent is going to give more opportunities and perhaps more choices for the buyers. And there is something else that's been going on. So you brought up, I think you brought up a good point. Pricing has been key in this market. So you're going to notice we actually have two inventories currently. We have the inventories that are selling and selling at a very rapid pace, and they pretty much are because of real estate professionals who took the time to run a really deep diagnostic on the property, price the property appropriately, and they priced it to sell in this market. And within hours or days, certainly within the first week or so, we're seeing offers on that property, and in some cases still multiple offers, which holds the price pretty steady. The other market that we have simultaneously is we have real estate professionals that are either not equipped or simply don't want to have the tough discussions that you would have to have with the seller to price the properties correctly in today's market. So they sit, and they'll sit for 30 days, 60 days, 90 days. If you have a property right now in today's market that's sitting for 30, 60, 90 days, the only reason that's sitting is because it was not priced effectively to sell at the onset. So one of the strategies that I'll be happy to share with you that we've been doing and having a large degree of success is we actually search for properties that have been on the market with a certain amount of days on market because they've now sat. So if the seller was sincere in their interest of actually selling and not just simply testing the market or putting a PFA price if they would sell, if we got this, but there's some that just were not priced appropriately, but do really want to sell. And so now it's time for them to receive an offer. So that's actually kind of neat because that's created for most of us a second level inventory that we can go to try to do a buyer match when searching for property.
You know, in today's market, that is a very good, I'll call it trick or formula, because everybody is hearing, oh my God, you put it up on today and there's going to be 7 offers. Well, why is my house on for 30 days or 60 days? Something is not right, okay, in this market if your house is on for that many days.
That's 100% true.
All right, let's swing off of that. Let's talk about new construction.
Yeah.
There's so much new construction going on. Is people swaying towards new construction, or are they like for me, I would prefer to buy an existing home.
And there are many people, Wayne, that are going to want to buy a new construction to be the first person to break the house in every way. And so there's going to be people like us that maybe prefer pre-owned, and there's going to be buyers that prefer new construction. So I think when they can get new construction, if that's what their choice is, they probably would do that. And there are quite a few selections. But right now, I think what the main fight is with new construction is the waiting time. So if you need to move or want to move now, and you consider new construction, and the new construction timelines are 6 to 18 months, you might not be able to wait that long. So then you may consider a pre-owned home, maybe something that you could even renovate or remodel and make it new to you.
we live in Florida. I would never, ever, ever, never, ever again buy a home that's on more than one floor. Do you find that most people in Florida are looking for that ranch or at least split?
I think that the largest portion, this actually just hit home with me. I have a 2-story home that I've been trying to sell.
Okay.
And what I
I
find,
know a great realtor.
I do too, and so far that hasn't helped. Actually, I did just get a couple offers. I turned one of them down. I'm just not sure I want to do with that property. I think I'm not ready to part with it. That's probably the case. But I think there's a smaller buyer pool in general that are willing to do the second floor. So what we also hear, just as often as we hear I want a ranch or a single-story home, is you'll also hear it followed up with, or a second-story home with the master on the first floor. And I think that what that comes is we all get to a certain age or stage in our life where we just don't want to do stairs.
We're older than dirt. Who wants to go up a
and
stairs?
we don't want to do stairs
Yeah.
at a certain point. So, but there's always going to be those particular buyers that are fond of 2-story homes. A lot of us grew up in 2-story homes where we had stairs. So there's something kind of comfortable about that too. So it really is just different strokes for different folks and finding what they want. But I think you would be correct in your assessment that people in general, we're going to have a bigger, larger buyer pool for single-story than necessarily a 2-story.
Okay. As we get to the top of our time, the next topic I want to talk about is investment property.
Oh, okay.
Okay. So is that market tipping up? Is that market waiting for these, what might be this foreclosure time? What's happening with the investment market?
So we have to quantify this investment market. If we're going to have this talk, we have to quantify investment of which kinds, because there's two types of investments. There's going to be the investment that you purchase and hold, and that's a long-term investment. So, and real estate has always been, it probably always will be, the timeless truth in investing and the safest place to stick your money if you're going to do it long-term. I think the people who did this best were like our grandparents. So our grandparents bought homes. They owned them for 35, 40 years. They took mortgages out. They paid that mortgage off. Then they paid to either marry off one of the children or put the children through school. Then they paid that mortgage off to recover that money. And then they still kept the home. And then they sold it. And usually after 30, 35, 40 years of equity growth, it was still an incredible investment.
Right.
So that type of investment is still always going to be there. And I think that, probably people far smarter than me as far as investing goes will probably also agree that is one of the best investments you can ever make if that is your plan in your long-term investing. Now, short-term investing or short-term investing for buying a property and having the tenants rent them out and have the tenants pay off your equity over time, that could also be like a short term or considered a long term. Obviously, you're going to have some headaches that you're going to have to deal with sometimes with tenants. I've been on both sides of that as an investor. I've had incredible tenants where I wanted to keep them even if the property was being sold. I wanted to try to find them, move them into something else. And I have had tenants that we give them high fives, on their way out. So I think it depends on, which type of investing. So when you say investing, which type?
I'm thinking of the latter of the two, where someone's going to buy property and rent it out, make the income, do what they got to do, probably flip it in a year or 2 years or 3 years.
Well, I think it's really important to understand that an investor in today's market is probably going to get this, and they're going to understand the climate that we're in. So that's still a market. It's still a healthy market. It's a good way to protect your investment and your dollars by investing and renting it out. But you're probably not going to see the capital rate of return on an annual or monthly basis like you did in years gone past, simply because you're going to buy for a higher price, therefore rent's a little bit higher, but it may just be a break-even scenario or maybe make a little bit depending on the, for cash flow purposes, depending on how much money that they were willing to initially invest into the down payment.
Interesting. With that, Mike, I know that you do your own show, and I hijacked this one because I thought these are some topics that were important to know. I know that you're coming back with some guests and stuff in the future, talking real estate and mortgages and home inspections, and you've had some great guests on already. I got to tell you that real estate is something that I've always looked at to be the safest place, because like people say, well, you could do stock and we guarantee it's not going to go down. Okay, when I buy something, I want to like see it, I want to hold it, I want to touch it, and when it makes me a lot of money, I want to kiss it. Okay, I don't want someone telling me, well, somewhere in the air is this stock that's going up and down, and that's me.
Yeah.
Everybody sees things differently. I know real estate, and I know that no matter what you got, you're going to be in a cyclical cycle with your real estate. I have a property, okay, and it was upside down, okay, in the crash market,
Yep.
by $60-something thousand.
Yep.
It is now, 3 years later or 4 years later, it is now $8,000 in the plus.
Yeah.
Okay, and I know that if I keep it, it'll go up, and it's rented out, so it doesn't really not that big a deal. The other thing about a home where you buy is people say, well, I paid $100,000 for my house, and now the market crashed and it's only worth $80,000. Who cares? You're living in it. It's yours. Stay there. It will eventually catch up. You're not losing money. Okay, you're still living in it. You're still paying whatever you got to pay. People just don't get it, and they think because it went down in the market crash, don't sell it. Just hang it. You got a roof over your head. You're blessed.
Well, that was like the best advice that you could ever give anybody. If you live in the home and we're experiencing possibly a downturn of a market of any kind, or you start to see the property values fluctuate a little bit, that's probably not the time to sell. That's probably the time to hold and just protect your investment. And then I love the fact that you shared that, a few short years later, and even if it's inside of a decade later, if your plan is still to be in the home, then your investment will return.
And you're not going to live in a cardboard box. I'm like, where are you going to go? Why don't you stay?
Yeah, that is the challenge. Because right now, I think a lot of people are facing. So if you do sell, where are you going to go? And I think you have to have a plan for that. And in order for you to have a plan for that, you probably need a professional, like a real estate professional, one that you know, like, and trust, that you can sit with and have this whole process analyzed, so make sure that from the origin of what your goals are and your needs are, that you're going to be able to accomplish them.
Okay, so on the lighter side, because I'm not going to let Michael talk at this point, Compass, which I knew nothing about until my daughter got her license and went with Compass in D.C.
Yeah.
And she did a ton of research about where she was going to go and found that to be probably the most responsible, most reliable, up to snuff company to go with. So with that said, if you're in this area, Michael's going to be the kind of person you're going to want to touch base with at Compass, because besides Michael being, and I know Michael for a while now, you've been in a couple of times, the company he works for, not on his word, on my daughter's word.
Yeah.
Okay, I wouldn't let my daughter. I've been in this real estate industry for over 30 years, and she did the research. And Compass has the name and the place to be. And if you're going to put your home up or you're looking to buy a home, Compass is the place to go. And if you're in this area, might as well use Michael. He's been around a long time, knows it backwards and forwards. Michael, I want to thank you for coming on.
I appreciate it. Thank you so much.
No problem. Everybody have a great day, and we'll be right back.